Looking at this chart now, this incredible 45-degree angle straight up into oblivion of debt, and it starts now. This is they're projecting.
Hey guys, welcome back to Library of Wealth. Today we have Bitcoin maximalist Max Kesier giving us an update on Bitcoin, the stock market, and how the printing of money is affecting every market around the globe. Kesier has been warning people that fiat currencies would collapse and why Bitcoin is a significantly better store of value. The pricing on Wall Street continues to erode trust with investors, and we're starting to see the negative effects of that now. Let's get into the interview with Max Kesier as he gives his prediction on the market collapse and how this will affect Bitcoin in the next few months. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
To manage this debt, to get into an austerity budget, to try to bring the debt down, it's an impossibility. And doesn't that portend, though, doesn't that suggest that they would come back with massive money printing?
Well, that chart looks like money printing.
Yeah.
Certainly their plan is, they're telling you for the next 100 years, or yeah, I guess it's about 75 years, that their plan is to print a whole bunch more. And their plan is, of course, also for the public to be the suckers at the poker table to buy this. This looks to me kind of like the Celsius bankruptcy documents as well, like all these documents and data being dumped in the New York courtrooms as Celsius bankruptcy unfolds. It certainly looks like a Ponzi scheme, and it quacks like one, and it sounds like the one.
This is the tied to the Lebanon, right? So Lebanon went through this 90% devaluation on their currency, and this has been a story that we've been watching in horror for the last couple of years, and the inevitability of this debasement was coming. And of course, everyone was suggesting to them to buy Bitcoin. And but for the U.S. economy and the world reserve currency, the U.S. dollar, this type of debt debasement, which seems on the horizon, of course, spells global problems, right? So for 30 years, bankers have been ignoring reality, hoping that at some point there would be enough growth to generate enough tax to generate some pay down on all this debt that they've incurred, and that hasn't happened. They just printed a lot more, and the debasement of the currency has followed. And now it's at the point where people have reached the end of their rope. The Bernie Madoff story is a good analogy, and it's a good story to revisit, right? Because they were being investigated. It wasn't until the third time that the SEC got into the Bernie Madoff story that they finally busted him. But during that whole time, there was this nod, wink attitude from the people that were investing in Bernie Madoff, who knew kind of either consciously or subconsciously that there was some fraud going on, because he was delivering these results that were completely inconsistent with anything happening in the market. But people became a sense of entitlement, because he went and he visited folks who were doing important things and had important charities, and it made them feel like, we're going to bring you in because you're an important person. It's a classic confidence game, because confidence games rely on giving somebody else the confidence to invest in something that might not be great for them. And when you get to the DeFi, the whole DeFi epoch in post-Bitcoin shenanigans, and everything after Bitcoin has been proven to be pretty much worthless. The DeFi period, which came after the ICO period, immediately it was like, okay, they wanted to sound like it's a financial product. Remember, the ICO sounded like an IPO, so it's kind of something to do with finance. And DeFi, distributed finance, these DeFi products, it sounds legit. But as you point out, and as even Peter Schiff pointed out, once you offer yields that are above a 10-year treasury yield, you're starting to take risks that you shouldn't be taking. And once you get into the yields that they were offering, it's quite obvious that they are engaged in what was be a classic Ponzi scheme.
Max believes banks are attempting to achieve interest rate neutrality without completely destroying the world economy. Kesier suggests keeping all of your Bitcoin, since they have value and can't be destroyed by money printers in the future. During periods of extreme volatility, the price of cryptocurrency can skyrocket and crash within just a few months. Kesier believes we are on the verge of a total financial collapse.
The charts always end up looking like that, and it's a chart of a failed experiment in one way or another. It's like they're telegraphing that there's a massive fraud coming. Like, why do they think they should publish something like that? Because if that's the truth and that's the reality that's going to be going forward, shouldn't they be doing something proactively to stop it?
It's a predictable model, and theirs is predictable predictably insane and predictably chaotic.
Yeah, well, the interest on the debt now in the U.S. is, I think it's becoming the biggest line item in the budget ahead of the Pentagon. So you're entering into that phase of a collapse where the interest on the debt is not even payable by the taxes you're collecting. And then that's a game over. So, I mean, the game, I guess, is that the U.S. is still going to claim to have the best, the cleanest shirt at the laundry, right? Like it's going to be relatively better than all these other fiat monies. And that's how they're going to sustain this going forward.
The people who want to control, whether it's the money printing, the cantillionaires, the global organizations, whether we know it or not, like even the fact that Bitcoin was birthed on January 3rd, 2009, just weeks after quantitative easing started, just weeks after the money printer started, Bitcoin started. The U.S. Treasury actually published this. And this is what the chart looks like. As you can see, that's all you need to know. This is the historical data that they say of U.S. public debt held by the public. And right there at this hockey stick moment is where we are now. So their prediction is like somehow by 2096, so this is their own emission schedule. This goes to 2096. Remember, we know the emission schedule roughly for Bitcoin going out to 2140. So we know our emission schedule. Here's theirs, and this is what they say the public will hold this much debt. We had QE, which started at the end of 2008. That was the first introduced into the West, into the United States in December of 2008. Bitcoin, of course, was born a few weeks later, birthed into existence a few weeks later. And then we had QE2, QE3, QE4. I'm not sure if they called it that, but we all called it QE to infinity. And now the question is when this next financial crisis hits, and it will, because that is inevitable. That's what happens in these boom and bust cycles. You could look at the charts of it getting crazier and crazier. What are they going to do? You thought they were going to do more quantitative easing, and I said, well, they're going to introduce a CBDC instead and roll it up all into one. Not only the banks, but also the government itself. They don't want the hard money leaving the country. So they restricted the amount of money that anybody could take. There's some restrictions just introduced in Nigeria as well. I think it's like $44 a month or something you could take out. So they have a dollar standard, and so they can't print it. So what they do is they devalue against that in the Lebanese pound, and they take that.
Major cryptocurrencies are trading in the negative as the global crypto market cap fell 2% on the previous day to $855 billion. Over the last 24 hours, total crypto market volume fell 33% to $96.7 billion. Most agree that Bitcoin will survive this cycle, but this is eerily similar to the dot-com bubble of the early 2000s. While most major cryptos are spending much of the day in the red, ongoing investor fears about inflation and a possible recession grows as central banks tighten monetary policy. The average American will suffer the economic consequences of banks making the same mistakes again, only this time there are several markets that are on the verge of collapsing. What do you think about Max Keiser's prediction for Bitcoin? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.